Hello everyone. Welcome to Kotak Securities Weekly Fundamental Podcast. I am your host Rini Mehta. Last week both Sensex and Nifty gained around 2.3%. Nifty has been outperforming its global peers as most of the global indices are trading below their recent support. Global equity markets continued their strong rally on expectations of US nearing the end of its rate hike cycle. And a decent first quarter earnings print for domestic facing companies also aided the market sentiment. If we look sectorally, metals, banks and realty were top performers in the week, while auto and healthcare witnessed losses on a week-on-week basis. Within the Nifty index, Bajaj Auto, Hero MotoCorp and Dr. Reddy's lost the most, while Bajaj Finserv, Bajaj Finance and Tata Steel gained the most. On the economy front, US FOMC increased the federal funds rate by 75 basis points while stating that future rate hikes will be dependent on the data. In the global markets, the Dow is now up nearly 2% for the week while S&P 500 and the Nasdaq Composite are up around 2.8%. The market is taking on a hope that slowing economic growth is going to result in a more dovish Fed moving forward. Now, if we look at foreign inflows, foreign portfolio inflows, month till date, FIIs are net sellers to the tune of rupees 6,567 crores, mainly on account of rising risk of inflation, recession in developed countries, rising interest rates and elevated crude oil prices. We expect FPI flows to remain volatile in the emerging markets on account of rising geopolitical risk and other reasons that I mentioned earlier, that is rising inflation, tightening of monetary policy by central banks and so on. Now let's look at the top stock picks. Our pick of the week is M&M Financial Services with a target of rupees 215. A strong asset quality performance in first quarter underpinned by a strong rural economy makes it easier to sail to forthcoming headwinds of change on non-performing loans recognition norms and a likely challenging macro environment. The company continues to gain market share even as rising rates pose pressure on net interest margins. New businesses will augment growth, not factored in our estimates. So we retain add rating on the stock with fair value of rupees 215. Now from the latest results, Blue Dart reported strong set of numbers for first quarter led by a rebounding economy. Second is decrease in administrative cost, especially fixed cost led by rationalization in domestic network. Third is cost efficiency, then improvement in realization, and lastly reduction in debt and finance cost. Given the improving macro outlook and leadership of Blue Dart, revenue and earnings for Blue Dart is expected to remain strong in near term. Sales were with low double-digit volume growth. We are impressed with the company's ability to continually deliver in a highly competitive environment. So we like the stock. Post first quarter results, we increase estimates and continue to recommend buy with an increased target price of rupees 9,800, which was 8,260 earlier, at 50 times FY24 earnings. Lastly, APL Apollo Tubes reported first quarter performance and it was commendable as it comes at the backdrop of sharp decline in steel prices. Revenue grew 36% year-on-year to 3,439 crores, down 8.4% quarter-on-quarter. Sequential decline in revenue was largely on account of 23% decline in sales volume due to destocking in anticipation of correction in prices. Robust earnings growth outlook, management's efforts to sustain or improve return on equity or return on capital employed from the current level, and a superior business model would act as a re-rating catalyst. So we maintain buy rating with an unchanged target price of rupees 1,025, valuing the stock at 28 times FY24 earnings. So guys, that's all for today. See you again next week. Signing off.